A big call on autos. Moody is getting negative on the sector, citing falling demand. The threat of tariffs and Brexit also mentioned as risks. Bruce Clark is lead auto analyst with Moody's and the co-author of this report. Bruce, welcome to the show. Good to see you again.
Glad to be here.
In terms of this recovery not coming back meaningfully this year or next year, that's even besides these other political risks, correct? This is
Correct.
just because of slowing economic growth?
Yes.
And then you add on the potential for tariffs, and then what happens to that forecast?
Our basic view really is this, that you're still going to see modest growth in the global industry next year. Still a pretty good industry. We're not calling it a downturn, but if you have that very low growth rate with this backdrop of risk from Brexit, tariffs, higher investments for meeting emissions regulations, it's a difficult environment. Now, we don't expect this environment to lead to any rating changes, but it is clearly a more difficult and a more challenging environment.
I'm surprised that the U.S., you think sales are going to be down 3% for this year. Does that happen outside of recessions? And we saw the same thing. Housing last year was down for the U.S., but the economy kept growing. What's going on with autos? What does it tell us?
Okay, context. We think that sales are going to be 16.8 million units next year. It's still a very healthy industry. I mean, we think that companies competing in the U.S. market can make a pretty good profit. So again, we don't view this as a disaster. We don't think that this downturn or this slowdown will contribute to any rating downgrades, but it is a more difficult environment. And I think the other thing to keep in mind is when growth slows in the auto industry, this industry does not have a very good track record of contending with that.
You can say that again.
Yes. So it's not really like I said, we're not looking for a downturn or a very serious collapse in sales, but it is a more difficult environment. We had a stable outlook. This is simply a negative outlook that's saying that the overall environment is more difficult than it had been.
Why is it happening? Is it happening because the prices of cars got so high, because people are holding on to cars longer, because their leases, their loans are 6-year loans, not 4-year loans?
Okay.
What?
A couple of things.
Little of each.
Let me take the United States as an example. It's been benefiting from something that we consider to be a very accommodative financing environment. Interest rates have been very low.
Correct.
The terms on loans have been extended. About 24% of all loans made are 72-month loans, 6 years. That's a very long period. You have a lot of leasing, and that's been providing a lot of tailwinds for the industry. Those tailwinds are being pulled back now, and that's contributing
Because why? Not because interest rates are that much higher.
Well, you can't keep moving in that direction. If you can't keep extending the terms on loans, you can't keep increasing the penetration of leases. So when that trend, that tailwind begins to die down, it's going to have an impact on demand.
Just quickly, Bruce, which automaker looks the best financially from your perspective?
Globally?
Globally, sure, yeah.
Globally, Toyota has been and remains a very formidable player. Never sell Toyota short competing in the auto industry. In North America, you got to give pretty high marks to General Motors. They're essentially going down the list, getting things done one right after another. They're doing a pretty good job.
Tesla in here?
Tesla's got some challenges. Tesla, we have a B3 rating on that company, which is a relatively low rating, and a negative outlook. There's some definitely challenges there.
Bruce, great to see you. Thank you.
Great,
Bruce
glad
Clark.
to be here.